Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings to find the hidden stories, and today we are looking at AA Mission Acquisition Corp. Advisory's reporting. It looks like they are preparing for some potential trading changes for their investors. This filing is about a company that is getting ready to let parts of its offering trade separately. Think of it like buying a package deal and then deciding you want to sell off just one of the items in the bundle. We will dive into what this means for shareholders and what the company is saying about it. Before we dive in, if you enjoy getting these unfiltered corporate insights, make sure you are subscribed. Also, we have a great community over on Discord. We'd love to have you. It is linked in the description below this video. Alright, so what we are seeing here is AA Mission Acquisition Corp. II, or the company announcing that starting on the 29th of October of this year, investors who hold their units will be able to split those units into individual shares and warrants. Basically, they sold units that contained both a share and a piece of a warrant. And now they are allowing those to be traded separately. Think of the units with the symbol YCU as a package deal. Inside that package are Class A ordinary shares, which are just the basic ownership shares of the company, and half of a warrant. A warrant, in simple terms, is like a coupon that gives you the right to buy a share of the company later at a set price. In this case, each whole warrant lets you buy one Class A ordinary share for $11.5. So if you have a unit, you have one share and a half a warrant. Now, the company is saying that starting late October, you can ask your broker to separate these. The units that are not separated will keep trading on the New York Stock Exchange under that YCU symbol. But here is the important part for some investors. The individual Class A ordinary shares will start trading under the symbol YC and the warrants. Those buy one, get one coupons will trade under the symbol YC.WS. This separation means investors can now buy or sell just the shares or just the warrants, without having to deal with buying or selling the whole unit. This can give investors more flexibility to manage their positions based on how they think the company's stock and its potential future stock price will perform. The date of this announcement and the earliest event reported is the 23rd of October of 2025. Now, the filing also contains a section for financial data and exhibits, but in this particular report, there aren't any detailed financial tables to dig into. This is not a financial performance report like an 8K that focuses on quarterly earnings or a major financial event. Instead, this is an announcement about a procedural change related to how their securities can be traded. AA Mission Acquisition Corp. The second is what is known as a Special Purpose Acquisition Company, or SPAC. These companies are created specifically to raise money through an initial public offering, or IPO, and then use that capital to merge with or acquire an existing private company. The goal is to take that private company public faster and more efficiently. So, this announcement about trading units separately is a common step for SPACs after their IPO, as different investors might prefer to hold and trade the underlying shares and warrants independently. From a big picture perspective, this move to allow separate trading suggests the company is moving forward with its plans for its securities. It offers more choices to the market. For investors who bought the original units, this gives them options. They can keep the units as is, or they can sell their shares and warrants separately if they believe one component will perform better than the other, or if they want to hedge their bet. It is a sign of maturation for the company's offerings in the public market. Now, let's talk about the broader implications for companies like AA Mission Acquisition Corp. II, which are essentially shells waiting to find a target company to merge with. The focus tends to be on the execution of that merger. The ability for units, shares, and warrants to trade separately can sometimes attract different types of investors. Those interested in the potential upside of the company's future acquisition might focus on the shares, while those looking for speculative gains based on the potential for the warrant price to increase, if the stock price rises significantly, might focus on the warrants. What we are seeing here is not about the company's current operational performance, as there are no financial statements attached. Instead, it is about market mechanics. It is important for investors to understand this distinction. This report, an 8K, is typically used for significant events that are not covered by regular periodic reports. In this case, the significant event is the announcement of the separability of units into ordinary shares and warrants. This is a standard procedural step that can unlock value and trading liquidity for investors. The fact that this is happening in October 2025 means the company has had some time since its IPO to prepare for this transition. It is a planned event, not a surprise. The company is fulfilling its obligations to provide information to investors about such changes, which is what the Securities and Exchange Commission, or SEC, requires. The company itself is incorporated in the Cayman Islands, a common jurisdiction for SPACs due to its corporate laws. This filing is a routine notification to the market. The checkboxes at the beginning of the form are generally for specific regulatory communication purposes, and in this case, none of them appear to be a primary focus for this particular announcement. It is mainly about the trading of securities. The essential takeaway is that the structure of trading for AA Mission Acquisition Corp, the seconds offered securities, is becoming more granular. This allows for a more precise investment strategy for those who want to bet on share price appreciation based on the company's future prospects, or on the potential for warrants to become more valuable if the underlying stock price increases significantly ahead of the warrant's expiration date. The company is also identified as an emerging growth company, which means it can take advantage of certain relaxed regulatory and reporting requirements. This often allows them to be more agile as they search for and merge with a target company. Now, looking at this filing, what is the story? It is not about how the company is performing financially, because there are no financials here. The story is about the evolution of the company's traded securities and the flexibility it offers to investors. It is a step towards potentially greater liquidity and more precise trading strategies for shareholders. It signals that the company is getting its affairs in order as a publicly traded entity and is preparing for future developments, likely the selection and merger with a private company. This is a typical maneuver for a SPAC aiming to make its securities more attractive and tradable in the open market. It creates opportunities for investors to tailor their exposure to the company's upside potential or its speculative warrant value. So, what is my take on this? This filing is a procedural update. It doesn't tell us if AA Mission Acquisition Corp, the SU, is a good investment right now because it doesn't contain any financial performance data. What it does tell us is that they are acting like a typical SPAC, facilitating the market's ability to trade its components. The risk here isn't in this filing itself, but in the broader SPAC market and the success of AA Mission Acquisition Corp, the SU, in finding a suitable company to merge with. The opportunity lies in the increased flexibility for investors and potentially a more efficient market for these securities. The ultimate success will depend on their ability to execute a value-creating merger. Alright, that is our breakdown of AA Mission Acquisition Corp. The Q's latest filing. What is your take on these moves by SPACs and what they signal for investors? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.